Okay, welcome to another YouTube video, and on today's video we're going to be talking about inducement. So I already created series of videos here where I talk about market structure, I talked about point of interest, and the last one would be the inducement, because these are the three criteria we use in taking trades. So I told you the first time that the first thing you want to do when you come to a market is identify your structure, and I already showed you how to identify structure on the market structure video and point of interest. So let me give you a textbook example before we come to the charts. So let's say we have an uptrending market like this. This is creating series of highs and lows. Now, when we have an uptrending market just like this, we have 2 points of interest, which I already clarified to you guys on the previous video. I said we have the other block, which is a point of interest around this point here. So we would have a point of interest here around this point, which is the other block before the impulsive movement, and we'll have another point of interest here, which would be the breaker block. I talked about all of these levels on the point of interest video. So if you haven't watched the video about how to identify your point of interest, go to the previous video I upload and just understand it. Now, inducement is a liquidity or a liquidity trap. Once that inducement is what fuels the market. Now, once you identify your direction of the market, you identify your point of interest. For you to have a very solid take to what is going to happen in the market here, you need an inducement. What is an inducement? It's a kind of liquidity. It's a low that forms in the market. Now, this low is a low that is just a low or a high close to any of your point of interest. Then we have a push to the upside, a false bias. Now, once this buyers start to push here, a lot of people will think the market has started to buy and they want to likely join the market. But what the market is just creating is a trap. It's a liquidity inducement trap. When people try to buy the market here, you just come back and take all of them out. You come back, take all of them out, and respect from the closest point of interest to that. You will respect to the closest point of interest that is below that liquidity zone and just buy from there to take out the next high and continue going in that direction. So in this case here, this zone here is our liquidity, inducement liquidity. So whenever you see a market, you want to identify the structure, identify the point of interest in the market, then you want to wait for the market to give you any form of liquidity. Then you are going to be looking forward to taking your trade in the closest point of interest to buy along. Now let me give you another case scenario where we have something like this. Let's say we have something, the market do something like this here. Now you identify the structure. You want to identify if that first inducement tap from this your point of interest zone and it create that liquidity from there, then you should know that this your point of interest is no longer very valid. It's not valid for a buy again. Instead, you are going to be looking at the next POI that is unmitigated for the market to react from there if the market will continue going in that initial direction. So this is how to just observe it. Now this point here would be your inducement. Inducement liquidity is like a trap, so you are waiting for that. You want to be looking out for that inducement that is close to your point of interest that is yet to be mitigated. Once you see any inducement close to any POI and that POI is yet to be mitigated, that is the POI you want to be looking for taking your trades. That is that POI you want to be looking for taking your trade. So you want to first understand your market structure, identify your POI levels before you now identify how to watch out for inducement to take your trade from POI level. So let's look at this example here. I dropped this signal in the group and it's already making good money. So let's just see. If you're not on the Telegram group here, I'll drop a link to the video so you learn it as well. Now, using this concept here, I talked about structure. Now if you take a look at where this market structure here is heading to, it's very obvious. I can see that the market is selling here. The market is creating series of lows and high, lows and high, and the market is just selling. Now there's a concept I talk about in one of my videos where I talk about waiting to ride a trend when you see a double breaking market structure here. Now this zone here is a double breaking market structure. That's why I'm very interested in this trade, because we have a double breaking market structure here. So when we had this trace, this double breaking market structure that we had here confirmed to me that the market is very bearish and will continue to sell. Now I identify my direction. I already identify my direction here. Then if you see, this is the low. After this break, this is the first low we have. Then the low came all the way to this point. Now if you understand what happened here on this chart here, you will understand that this my POI, which is the breaker block, this my POI, this breaker block POI is yet to be mitigated. So the POI is still very fresh, and we now have a inducement liquidity now resting below this fresh POI. That's why I'm using this point to take a trade. As you can see, all my buyers now are meet. Double breaking market structure, identify my structure, I identify my inducement, then I identify my unmitigated point of interest. That's why the trade will come now. What is expected of the trade now is to come after creating this inducement liquidity. Is going to retrace, use this as a trap. All of the people that joined this market thinking that the market was continuing to sell is going to take them all out and respect from this my breaker block level, which is the POI of this current trend, and bounce back all the way down. So this is just how to trade it, understanding POI level. Whenever you come to the charts, you want to pay attention to three things. The first thing is understanding your structure. Where is the current structure of the market heading to? Once you identify the current structure of the market, you want to identify your point of interest. Your point of interest zone would be your order block and your breaker block level. Your order block and your breaker block level. Then you want to watch out for, once you identify your point of interest, you want to now wait for inducement. If your inducement did not respect from this zone, that means this is your valid zone. Let me give you an illustration here. Let's say your inducement here, after you identify your POI, your inducement just reacts from here and do something like this. Then you should know that it created liquidity, inducement liquidity, and you're just going to come and react from the closest point of interest, which is not mitigated yet, and bounce from there. Now in another case scenario where, let's say, the market came and reacted from this your first POI and bounce, then you're going to be looking at the market now, the retracement, to come all the way and tap from this unmitigated POI that we have here and bounce all the way to the upside to continue in that initial direction. And this zone now will serve as a trap. Most people, if they see this breakdown now, they'll think the market has started to sell, but it's just going to respect from this POI and continue pushing back up. And mind you, again, your liquidity can come in different way. Your liquidity can come in like this. Maybe just, I want to see a very decent move, like 50% move up. You want to make sure the push is enough to trap people in before you mark that zone as a liquidity point. So this is a like a 50% push after this retracement. Then you know that you come back and take it out and respect and push up to the upside to continue in that direction. Some other way it can also appear is like this. You might just come, do this, come back up, take this out, and bounce to continue going in that initial direction. So this is what you want to pay attention to when riding a trend. Pay attention to it all of the time. Make sure you just stick with discipline, and it's definitely going to play out well. So this is it, and this is how I caught the trade. I post it on the group. You can also join to trade my signals for free. See you on the next video.